Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Kirk McDonald, portfolio manager with Argent Capital Management. He joins me to discuss strategy and opportunities in the mid-cap space, and mid-caps are the best performing domestic asset class over time. We'll get his viewpoint on that. Kirk, it's great to have you with us. Welcome to Trade Talks.
Hey, thanks, Jill. I appreciate being here.
You got it. And let's start with an overview on the market. How has it historically performed in midterm election years?
So midterm election years are historically the worst time to be invested in the stock market between January and the end of October, where it on average only goes up about 1% compared to more like 5 or 6% for a normal year. But after the midterm election, it's the best setup for markets. 16 times out of 16 in the last 60 years we've had in the midterm election cycle, the stock market's been up in the next 6 and 12 months by an average of 15% and 16% respectively. So it's a very good time post the midterm election.
What about mid-cap performance specifically?
So mid-caps, as you mentioned, are the best performing domestic asset class. And typically they go down less in bear markets like we've had this year. Through earlier today, the S&P 500 large cap stock benchmark is down 21%. The small cap S&P 600 is down 20%, and the mid-cap benchmark is down 17%. So a little bit less on the way down than it historically bounced higher than the small cap and large cap stocks do. So it's a good space to be in.
Tell us about the strategy you employ in the Argent MidCap Fund, and why do you believe that midcaps, we already covered that, but over time, what specifically about midcaps, why do they perform so well? Is it something within their balance sheets or the businesses that they're focused on?
Yeah, I think there's a couple of things to that. Like most things that get stuck in the middle, it has a bad connotation. You get stuck in the middle of nowhere, your career gets bogged down in middle management. Mid-cap stocks get overlooked by a lot of investors. So you can find more opportunities in mid-cap stocks than you can in large and small cap. And also it's been shown in academic research that a management team that's been able to develop a product or service that's useful to people and been able to grow the company from the small cap benchmark up to the mid-cap benchmark, they historically do very, very well. So the mid-cap benchmark is a good place to be because of that. And then also compared to large cap stocks, once you get to that mid-cap space, you have a lot more room to grow than you do when you're a large cap stock already.
So Kirk, tell me about the Argent MidCap strategy. What are some of the companies that you like right now?
So one that we like right now is Cheniere Energy, ticker symbol LNG, which is very appropriate because they're the largest domestic producer of liquefied natural gas. They're in a very, very good place to be right now. Europe, as you know, has stopped buying their natural gas from Russia, and they were largely dependent on Russia and for about 60% of their gas deliveries. And now they're looking to the United States as one of their largest providers of liquefied natural gas. So Cheniere Energy is in a great spot.
And it's interesting, I was looking at a couple of your other picks as well. There's multiple industries that you have represented. So not only are you in that sweet spot where growth is available, being in the mid-cap space, but you're diversified across a number of sectors as well.
That's exactly right. So what we like to do with the Argent MidCap strategy is we look for the right company with positive change. Cheniere obviously has that. Another good example from the information technology sector would be Fair Isaac Company, ticker symbol FICO. So they're more famous for the FICO scores, and a lot of people don't like them if they disagree. They think their FICO score is too low, but they're in a sweet spot right now. For about 25 years, they never raised their prices on the FICO scores that they charged the credit bureaus and their other users. They kept those prices largely static. But starting in about 2018, they realized that they had significantly underpriced their scores, where they only cost pennies for a user to get a FICO score from Fair Isaac Company. But those scores can be worth thousands of dollars if you're wrong on somebody's credit quality. So they've been raising their prices 5 to 7% a year on the FICO scores for the last few years. So they have this huge positive change now at Fair Isaac Company.
And finally, Kirk, if we look under the hood of the Argent MidCap Fund, what's the methodology behind it? What's your stock selection process look like? What's the holding time with the companies that you employ in the portfolio?
Exactly. So we use a mix of quantitative and fundamental research, and we're looking for alignment between the two, and that's our secret sauce, where we have a multi-factor stock selection model, and we're looking for alignment between the corporate strategy and the good scores in that model. And our holding period is as long as possible. We like to buy a good business with positive change and own it forever if we possibly can. So on average, in the life of the fund, in roughly 9 years, it's about a 30% turnover. In the last year, we've only had a 21% turnover. And ideally, I'd like to keep driving that down as low as possible. And for us, a good business is one with three characteristics. It's above average profitability, they generate above average cash flow, and they have a management team that's a good steward of that cash flow.
All right, Kirk, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.